a second. Let's just wait a moment. What a day it was today, Tom. I got into that trade so good. Good. But it didn't go up to 566.
Yeah.
Right.
It has come to my attention through the Lord of Liquidity, who whispers to me in my dreams and in my minds constantly,
Okay.
that although I have been providing you guys the keys to the kingdom and how to trade profitably, some of you don't know how to trade. Like at all. Like at all.
I'm learning.
Learn from this guy who's been listening to me now for how long? And when I say, hey, put on a trade like this, aim for this level, this should take profit, stop loss, he goes,
Well,
very much a dog looking at the moon situation, trying to figure out how to catch it. So we're going to be doing some of these revelations, folks, where we're going to be going in, and instead of talking about the big macro moves, talking about the liquidations and talking about interest rates and all those sorts of things that only matter to people who can sail, we're going to first teach you guys how to even get on the boat, how to even, well, I'm going to show you, Peter, the everyman, and then the people outside who you're an avatar for will be able to pick up the lesson from there as well. So without further ado, please don't interrupt me. Without further ado, let us go ahead and take a look at the trade setups for February 9th, 2026. Peter, I did you do this a disservice. Because I was working at the same time and doing other things, I did not see the sorts of things I would see in the chart when I am directly trading. So let's just rewind the day and treat the day candle by candle the way that we should have. All right.
I do want to say one thing though, just to make it clear.
Let's hear it.
That first of all, I trade myself, and I'll take some guidance, but my trades are on me. All right, and I want everybody who's watching, the trades are on you.
Clearly,
do your own research, figure it out. Tom is not unerring. Sometimes he makes mistakes, and you just got to accept that.
That's right. So we're going to be taking a look at the NASDAQ. We're trading MNQ here. Take a look at this where every point is $2. And we want to see how we should use our indicators and how we should think about where to enter, where to exit, how to determine a trend for the day, and how to scalp. That's generally what we're doing with these indicators, right? You're trying to, the ideal situation is catch a trend for the day as early as possible and hold it to the end. Barring that, you're trying to catch.
Go ahead.
Barring that, you're trying to do a momentum trade. You're trying to say, hey, there's a trend I can see here. Let me go ahead and try to get a part of that. If you can't do that, you're trying to scalp, trying to be like, okay, if I don't know what a trend is going to be, what's a move that could happen in a short period of time where it can capture some dollars? And barring that, you go, how do I stay out of trading altogether if the day does not have the right setups for you? Those are the 4 things you want to be thinking about when you're dealing with the indicators.
That was my biggest mistake when I started trading last week. It was, I see the I got to start at some point. I see the bars and I want to get in and it's really red, but it's really about catching a trend. And the goal is to try to catch it as early as possible, knowing in your mind, there's always another trade. Like you don't got to be like, oh my God, it's halfway through. I got to get into it now. Look how much it's going. You got to just do your best to get it as early as possible. Maybe you have 1 or 2 shots at getting into it, and then just letting it go if it doesn't work your way, and setting up for the next thing. That was, I learned that the hard way. Let's say.
All right, so I always prefer to start trading right when futures open at 6 o'clock, or rather, that's when I start looking at the charts. Because if you're the type of trader who looks at the 9:30, like you're just going on U.S. session, half of everything has already happened, and you're sort of like halfway through the story trying to figure out what's going on. And a lot of things happen in the during the US session that people in the overnight were already paying attention to. So in the overnight session, you're going to see here on the chart, we're taking a look at the 15-minute MNQ chart. And these vertical bars over here, these blue vertical bars are representing the starting bar for the session, 6 p.m. Eastern Standard Time. All right, that's when it starts. The lines that we're seeing on the chart, every single line you're seeing on the chart here, all these lines are all levels. They come from the levels indicator from the Sacred Profit set levels. And what these levels are is they represent volume weighted average price, so VWAP levels that were unmitigated. All right. Unmitigated means that in the previous session, VWAP closed at a certain price level, and that price that it closed at needs to be revisited again for it to be mitigated. Unmitigated VWAP levels act as magnets for the price. So the chart is a series of all these levels that are all over the place. Here we're only seeing the weekly and the daily, but we're going to see other levels here as we go on. And all these levels are competing with each other in order to drag the price. The more recent the level was created, the more powerful it is. The more long-term the level is, the more powerful it is. So it's always this mix, this dynamic, and this is what drags the price up and down and up and down and up and down and up and down. All right. So when we start last night and we look at the open, there are three main levels that we're going to take a look at. And what we're trying to do when the market opens is that we're trying to determine the trend. If there's going to be a trend, to where can the price go, and how much can I make in that? If I capture that entire move, how much can I make? So, and the trend is you. Sorry, go ahead.
I just want to make it clear. So we're looking at we're doing a trade review for this past day, for today, right? Today's the February, was it?
That's
8th?
right, 9th.
February 9th. So we're doing a trade review for February 9th. And is it our intention to do reviews every day?
We'll see. I like doing things for which I get praise and attention.
Okay.
If I get no praise and attention, no likes, no shares, no nothing, no subscribers, I will stop this real quick, and I will keep all this useful information to myself.
All right.
But I would do it every single day if people gave me the praise that I need. Did I make that clear? I'm here for the views, not for the lulls. My life is pretty happy on its own. I don't need to be sitting here and telling people, you get it. You get it.
All right,
I get a little bit of my feeling sometimes.
Let's make this quick.
All right. 6 o'clock, futures open. We're trying to determine the trend. One, you go, where can the price go? The price goes to, normally, the nearest level to it, like price-wise, the nearest level, and usually the weekly level. So you're looking at the red line over here for my weekly. So this is where it opened up. So when the candle opened up over here, let's just zoom in a little bit further. Candle opens up over here, and what did we see when the candle first moved? Because this is where the price closed the day before. A big green candle. All right, a big green candle. So that tells me, okay, we're not sure yet what's going on. The price just came to retrace up to the weekly VWAP level. This happens all the time. The price constantly at the beginning just adjusts to where it needs to go. We talked about this more on Sunday Fuel on Sunday. I don't want to belabor the point here, but that first candle you sort of want to ignore. All right, it's just going up to whatever level it's the nearest level. Now, once we're here, it's really from the second bar here, from the here to the 615 bar. Now that's where I'm looking for. So the first VWAP, the VWAP over here, which is because it's because the week started already, the weekly and the daily VWAP are the same right now. Like if I were to hide the weekly one, you'll see the blue one underneath, right? So both of them are the same right now because they're calculating from the same point. These first bars, usually within the first hour, I ignore it, really. We can use VWAP as any indication there. What I have an expectation for is that the price is going to move to this dotted line. All right? At some point, the price is likely to move to that dotted line. Why? Because the next nearest level is above us here at 25,560-ish. And another level, a daily level here, is below us at 24,970. Okay? Now, you'll notice here that this line at 560 is older. It started way, way, way earlier back. And this data level here below us, we actually have two here, one at 970 and one at, let's call it 850, 836. These two levels are recent. It was just created here, just created last night. And so chances are, because the price is up here and we have a weekly level here below the price and a daily level below here, the price is likely to come down. Not always the case, but it's likely to come down. So, Peter, last night I was talking about it because the price came up over here. One thing I like to do when I see this like a move up that day is that I don't know necessarily if the price is going to come down to those levels today. It might happen some other day down the line. It could be a magnet, but happens later on. So when I see a strong move, sometimes I'm like, you know what? Let me just get in right now to see, because maybe we might take a quick chip. We might take a quick chip up here and then come down. That was the idea that we had talked about last night. It might go up and then come down. And so I like to try to get in over here. But generally speaking, if I was talking to someone else, I would say don't get into any trade right now.
Right.
Because you don't know where we're going to go. Even after over here, once it broke down over here, there's a little bit of a trade from over here to over here, but you're really looking at a drop of about, from that kind of close to over here, you're looking at 73 points, right? Which is $140. So, it's hard, because you'll see over here, and Peter, you probably experienced this last night. Let's say you get in over here. Let's say you don't get in on this candle that breaks right away. Let's say you wait for a full candle close below, right? So this one's even a little bit on the VWAP. So maybe you get in on this one right at the close over here on the candle. Let's say that's what you do. I'm waiting for a full candle close below VWAP. So then your stop loss might be like over here somewhere. And the price comes down, and you're like, oh yeah, it's gonna work. It's gonna get to that level. And it comes back up over here, stops out, and then comes down to the level. So if you're going to be trading something like this, I'd rather wait for the pullback, then enter to aim for this trade down here. And then this trade from that level would have yielded $70, $40 for a micro contract, $1,400 on an NQ. Hey, trade however you want. That's the idea here. But this to me is not helping me set the trend, right? Because this level is so near, I go, there's no real trend here. I can't tell later on today where this price should go. I got to wait for the overnight to sort of like complete itself. And what did we see on the overnight? This level afterwards, after it gets mitigated, you got to see how price is going to move after that. Because we were making lower highs, right? Lower highs. What I would do is, after it gets mitigated, I want to see either a bounce off here up above VWAP, or a bounce head lower and then confirm this level and go down again. But you'll see here how it did the same thing. Let's say you said, okay, I'll do what Tom says. I'm going to wait for a candle close below here. So you enter over here on the candle close, or over here on the candle close. What happened? It came down. You're like, yeah, it's headed towards my direction. Came up to liquidate you, and then goes down.
Right.
Right? It even does this thing where it does a near miss. Peter, near misses to me drive me absolutely crazy, which is why and it happened all the time, which is why I set my take profits never directly on that line. Whatever that line price is, I always set it a little bit above that. And if I see something like this where it starts to go, I go, I'm getting out of this trade. Because this sort of near misses happen all the time. Right. You'll see it constantly, like over here.
Let's not go to the past. We don't have time.
Yeah, let's not go to the past. So when I get a near miss, never make this mistake. Never make the mistake of thinking a near miss is good enough. It counts as a hit. It does not. Wow. Great place to exit your trade, but never take it as, oh, it was only one tick away. The algos know it's one tick away.
Damn it.
Well, everyone's getting here. This drop, you can imagine everyone's going, oh, I'm not going to miss it. They go short, 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 short. What do you think this is? This is the liquidations of all those guys. They get rinsed.
Right.
And then where does the price go after that? We come back down. Oh, look at that. We did hit it. We did wick there. So that's why when I set my limit orders or my stop orders to enter into a trade, I do it directly on that line. Directly on that line. But when I'm exiting, I don't wait for the line to get touched. But if it's an entry, directly on that line. Because what would have happened if you set it directly on that line? Let's say you were out of this trade in the morning, you would have wicked. It would have got you in. Perfect entry.
Couldn't have been better.
Couldn't have been better. Now, I'm not going to go long on this. We talked about this on Sunday. We'll talk about it more in the future. But you'll see there's two lines here. Why are there two lines? Because there's two different VWAPs we're calculating on the daily. We're calculating the session VWAP, so just from the US session from last time, just from the US session. And the other one is the whole VWAP for the entire day. Counts the overnight. That's what those two lines are. And yes, think of them as a block. The whole thing needs to be cleared for that level to be done. So constantly you'll see that both of them get cleared at the same time. Both of them get cleared at the same time, again and again and again. Today it didn't. So here, I would be setting 2 limit orders, one on this line and one on this line. This one, if the price continued, would have liquidated. And then the second one I would have gotten for the next bounce. Anyways, after the bounce happens over here, it was a squirrely day. And this is what I didn't tell you, Peter. You constantly have to go back. You have to go take a look at the US dollar. You go to the DX futures on the dollar, and you'll see that the dollar is doing its own thing. From its own overnight, it's doing its own thing. It's headed towards its own volume weighted average price. And if I had paid attention to this to see, hey, it's falling towards over there, I would know that's generally speaking bullish for equities. When the dollar falls, bullish for equities. When it does the opposite, the opposite. So when I'm not sure where the trend is, I should look at the dollar and go, the dollar's falling, I'm going up. Let me take every possible entry I can, whether that's over here, whether that's over here, whether that's break above. Let me go ahead for the long. The last scenario for the long here, and this will be the second last thing I say before we end today's stream, is this cross where the overnight VWAP and the daily VWAP cross from bearish to bullish or bullish to bearish is usually a sign for takeoff. Now the takeoff starts before, right? These are lagging indicators, these VWAP levels. But you'll notice that when it took off, all the orders, all the algos that are set for a cross, right before that cross, they're like, okay, cross is about to happen. Let's go ahead and take off. So if you see a narrowing of this range, chances are when it crosses, you're going to have liftoff. And where does it lift off to? The next nearest level, which is above here. It doesn't have to get there now. It's on its way there.
What is the indicator that does that cross thing, that red-green thing?
So we have 2 levels indicator. One is called levels with an S, and the other one is called level. So we have levels and level. Levels, if you toss that on your chart, will give you, let me just put that real quick so you can see. Levels will give you up to 4 different time frames that you can have on the chart with one indicator. I do this for people who don't have a plan that allows them to put a lot of indicators on the chart. It's useful to be able to have it all in one. Here, so I could put a daily, the weekly, the monthly, the 3-hour, the 15-minute, the 2-hour. I could put a combination of 4 on the chart. The problem with that is that PineScript TradingView only allows you to have 500 lines for any given indicator. So then when you do that, if you have all 4 of them activated, you're going to notice there's lines missing that you only see when it crosses, because the indicator, when it crosses that line, will then show it to you. And that's a problem. So I created a level indicator that's the same thing as that, but only for one time frame. The benefit also for the one time frame is that I can use a show trend fill. And when I activate that, like if this is off, you'll notice that I don't have it colored red and green. It's just the normal VWAP levels for the day and for the overnight, right? But if I color it, this is a shortcut for you to be like, hey, what would Tom say for the trend today? Well, if they're stacked, if the overnight is below the daily, it's bearish. If it's the other way, it's bullish. So whatever, it's a shortcut, whatever trend that day, if you come into the day and it's green, you might as well aim for the bullish trend. If it's, so here it worked out great. It's green, head up to the next level above us, which is the VWAP, the weekly VWAP. Here it's red, head down to the next level. It helps you tell what direction the price is likely to go to, right? But this cross is one of those weird things. It doesn't happen often, but when it does, it usually means takeoff.
Fantastic.
Yeah.
Thank you.
So this line over here, because this level, this overnight VWAP level was not crossed, at some point we got to go and cross it. If you go back and look in the history, you'll notice that when this happens, when only one gets crossed, price is coming back down. And we already see today the market is open on the overnight. Where is the price coming to? It's coming to the 2 levels that were created today. That's where the price is coming to. You want to take a trade at the beginning of open, the price is away from the most recent VWAP levels. Just trade in direction of the VWAP levels. You're going to be right 85% of the time. And depending on how this acts over here, will let us know if we're going to get a right down over here, or if we're coming up to touch this other one, which is one of these levels that was missed from weeks ago. And because this one is younger, this one is stronger than its sibling that's older. So that's a quick idea here. They're just these levels, these magnet levels. You're looking for trend. If you can't get the full trend with perfect entries because you're setting your limit orders on the VWAP levels, if you can't do that, then you're trying to capture a part of the trend that you already know because you saw how the price moved and where it's going to. Okay, try to catch that a little bit. You can't get that. Get a little bit of a scalp from a bounce off of VWAP, from the return. You look at where the price is going to go. You know what it's responding to. And if you can't get that, don't freaking trade. Just wait for the next perfect opportunity because there's always going to be opportunities. You're also thinking to yourself, oh, I'm going to miss the trend. I promise you, there's another one.
I want to let you folks know that I'm learning how to trade. So if you haven't traded before, if you're new to it, or if you just don't know how to use these levels, these indicators, highly recommend you like and subscribe to this content. We're going to be continuing to teach you how to do this. I'm going to be learning along with you. Tom is a great teacher, and there's so much more that you can learn, little tidbits, what to do with your stop loss, for example, moving that up into profit, things like that. I thought it was more difficult, but it's not. So if you're intimidated, just give yourself a chance and just keep paying attention to this channel. You're really going to want to do that. If you haven't seen it yet, we have a Tom shows you how to use the levels indicator in a previous video. That's already on our channel right now, but we're going to keep repeating, clarifying, more to come. If you have questions, please post them, and we're going to be answering those questions as we go forward. It's time to learn to trade. And if you already know how to trade, it's time to learn how to trade like a high value trader. All right. High earning, AI leveraged, level headed, overflow. If you don't know what that is, well, you haven't been watching long enough. Tom, great job.
Thanks. We didn't even get to 2-hour levels, 50-minute levels, or anything like that. There's so much more to go over the weeks ahead. And if you guys joined the Telegram group, hey, since we're just starting off, I'll help you. I'll hold your hand, baby bird. But once I get popular enough, I'm out of here. And once I'm really popular, we're done. So you got a small window. Get on the arc, folks. It's raining outside. All right. Thanks, everyone. We'll see you when we see you.
All right. That was good. We got to figure out. You're going to have to let me know where you're thinking for tonight's trade, how to put that on.
Sure.